Advances in Financial Machine Learning is a groundbreaking book that explores the intersection of finance and artificial intelligence, providing a structured approach to applying machine learning in financial markets. Written by Marcos López de Prado, a leading expert in quantitative finance, this book addresses the challenges of traditional financial modeling and demonstrates how machine learning techniques can enhance decision-making and risk management. Unlike conventional financial textbooks that focus on standard statistical methods, this book provides a deep dive into advanced computational approaches, offering practical implementations of machine learning models in finance. The book begins by laying the foundation for machine learning in financial applications, explaining key concepts such as data structures, feature engineering, and sampling techniques. López de Prado emphasizes the need for a robust framework to handle financial data, which is inherently noisy, unstructured, and non-stationary. He highlights the importance of working with high-frequency data, as well as the challenges associated with overfitting and false discoveries in financial models. The author introduces concepts such as labeling financial data, meta-labeling, and the triple barrier method, which allow traders and analysts to define trading signals more effectively. One of the key strengths of this book is its focus on feature engineering, which is crucial for building predictive models. López de Prado discusses different ways to extract meaningful features from raw market data, including entropy measures, microstructural features, and time series decomposition techniques. He introduces the concept of fractional differentiation, which allows traders to retain memory effects in financial time series while maintaining stationarity. This concept is particularly useful for constructing features that capture long-term dependencies without losing critical information. The book also dedicates a significant portion to machine learning algorithms and their applications in financial markets. It covers a range of supervised and unsupervised learning techniques, including tree-based methods, neural networks, and clustering algorithms. The author emphasizes the importance of proper model validation and backtesting, as traditional approaches often suffer from look-ahead bias and data snooping. He presents walk-forward analysis and combinatorial purged cross-validation as solutions to ensure the robustness of trading models. Risk management is another critical aspect covered in the book. López de Prado explains how machine learning can be used to optimize portfolio construction, manage risk exposures, and detect anomalies in market behavior. He introduces concepts like the hierarchical risk parity (HRP) approach, which improves portfolio diversification by leveraging machine learning techniques. Additionally, he discusses execution algorithms and market impact modeling, showing how traders can minimize slippage and transaction costs using AI-driven methods. What sets this book apart is its emphasis on the practical implementation of machine learning in finance. López de Prado provides numerous Python code snippets and algorithmic strategies that readers can apply directly to their own trading and investment processes. He also highlights the ethical and regulatory considerations of using machine learning in financial markets, stressing the importance of transparency and interpretability in AI-driven trading systems. Analysis and critique. López de Prado's Advances in Financial Machine Learning is a must-read for quantitative traders, data scientists, and financial engineers looking to integrate machine learning into their strategies. The book's structured approach makes complex topics accessible, while its emphasis on practical applications ensures that readers can immediately put the concepts into practice. One of the book's major strengths is its rigorous approach to financial modeling, which addresses many of the pitfalls of traditional statistical methods. By introducing novel techniques such as meta-labeling, fractional differentiation, and hierarchical risk parity, López de Prado provides readers with a cutting-edge toolkit for developing robust trading models. However, the book is not without its challenges. It assumes a high level of mathematical and programming proficiency, making it less suitable for beginners. Readers without a strong background in statistics, machine learning, and financial markets may find certain sections difficult to grasp. Additionally, while the book provides Python implementations of various techniques, it does not offer a step-by-step guide for beginners, meaning that readers may need to supplement their learning with additional resources. From a crypto trading perspective, many of the methodologies outlined in the book can be adapted to digital asset markets. The principles of feature engineering, regime detection, and meta-labeling can be particularly useful for analyzing crypto price action, given the high volatility and 24/7 nature of the market. Additionally, machine learning-based portfolio optimization techniques such as HRP can help crypto investors manage risk more effectively. However, given the unique characteristics of the crypto market, such as lower liquidity in certain assets and the influence of sentiment-driven trading, some of the traditional financial models may need to be adjusted for optimal results. Overall, advances in financial machine learning is an essential resource for professionals looking to leverage machine learning in finance. It challenges conventional approaches and provides a forward-looking perspective on how AI-driven strategies can transform the industry. For traders and quants willing to put in the effort to understand and apply the techniques discussed, this book offers invaluable insights that can lead to a significant competitive edge in the markets.